What we're going to do right now is to lend our attention to the very first panel discussion on blended financing for sustainable development. The head of Africa, a member of the executive committee of the World Economic Forum, Madam Elsie Kanza, left us with enough fodder to zoom into this discussion. It's my pleasure to invite these very spirited panelists and their moderator to take their place up here. Would you please make welcome the General Manager, Impact Capital Advisors, Mr. Anthony Annan. A round of applause. Thank you, sir, for joining us. He's joined by the Director of Actis, Mr. Tony Abakasi. Two of them will be joined by the Managing Director and the Head of Citibank Public Sector in charge of Africa, Mr. Peter M. Sullivan. Our moderator is the co-founder of Social Enterprise, ladies and gentlemen. Make welcome Ama Lati. And so for the next 45 minutes, we are going to be deliberating on blended financing for sustainable development. I believe it will entail some questions and answers from you, and so I entreat you to please put together your points, your questions, your suggestions, and we shall have very fruitful deliberations. Over to you, Madam Moderator, and your panelists.
Thank you very much. This is such an exciting day and a really interesting topic to be taking on blended financing. According to the United Nations, the total financing needed to realize the SDGs is 4 trillion. And there isn't enough money if you look at just public resources, international development funding. There's a funding gap of about 2.5 trillion every year that is needed to realize the SDGs. Blended financing has been held out as one of the strategies to make filling this gap possible and to allow us to get the critical funds we need for sustainable projects, sustainable businesses. So this session is really to talk about that. What is blended financing? Are there any successful examples of blended financing? And what do people in our audience need to do to be able to participate in driving this asset class? But before we go to the panel, I want to get a sense of who we have in the audience. So we'll do a little bit of a roll call. I want you to raise up your hand if you are here and you work for the government. Just raise it up as high as you can. If you're here and you work for the government, raise it kind of quickly. Thank you. If you are here and you consider yourself an entrepreneur, please give us a wave. Entrepreneurs in the house. Quite a few entrepreneurs. Raise your hand. If you are here and you are an investor, asset manager, let's see. Few of you, not as many, but thank you for coming. And if you are here and you are from the international development community, let's have a wave. It's very interesting to see the mix, the percentages of the waves. And as we begin to talk, we'll talk about what's needed to change in terms of the numbers in the room to really drive not just revenue, but drive capital that can help us achieve the SDGs. So, panel, that's your audience. And over the next 40 to 60 minutes, we're going to talk about blended financing and how we can unlock it. But first, we need to define what it is. I'm sure there are many people who are wondering what is blended financing. So I'm going to ask Mr. Annan to tell us exactly what blended financing is, one perspective, and then I'll ask the same question to people and see if we can have two perspectives on what blended financing is. The mic is right next to you.
Thank you very much. Let me probably try to explain it by using an example. You could think of blended finance as trying to do like a mixed fruit juice. You have different types of fruits. You put them together in a blender and you blend it. Because you were looking for a certain expectation. So in a gist, that's all it is. Basically, we are talking about SDGs, and both the private sector, the public sector, the development partners, and should I say the beneficiaries are all basically aiming for the same SDG goals. The question then becomes, how do you put money together in a blender so that it goes to achieve the same goals, knowing that just like in a fruit juice, every fruit has its own flavor, every source of money has its own flavor. So the government money might have its own, what I'll call return expectations, which I'll call the flavor. So it could be development outcome returns. The private money might have its own flavor in terms of what it is looking to achieve and what risk it's prepared to take. The development finance money will also have its own flavor. So the question then becomes, how do you put all this together to achieve the goal that you want? So in a gist, that's basically what blended finance is all about.
Good morning. Just to take up from there, when we think about blended finance, we think about how do we leverage public sector resources to mobilize private sector capital into particularly the SDGs in this context. There's a lot of thirsty people out there, and we have to produce a lot of juice. And I think blended finance isn't necessarily a new topic. The most historic form of blended finance has been through export credit agencies. So you have, say, Boeing in the US works with the United States Ex-Im Bank, who provides a credit enhancement for the buyers of the airplane, say, from Boeing. So it's a way to use US government money to attract a bank such as Citibank to finance the purchase of aircraft in Africa. So that has been the traditional historic way of looking at blended finance. Now what's changed is we look at the different public sector actors that can provide resources in order to attract that private sector capital. As Mana said, there's not enough public sector resources to address all the finance requirements for SDGs. So when we think about public sector, we think about the host governments, so the government of Ghana. We think about developmental finance institutions like AFDB. We think about donors. We think about DFID, USAID as part of that. But we also think about NGOs, such as the Gates Foundation. So how do we cleverly begin to put that money out there to begin to sort of risk to fees the opportunities that is attractive enough to get the private sector capital to come in and to fund the SDGs? And I think we'll get into some more examples of that.
Thank you very much, Mr. Annan and Peter. The next round of questions actually goes to everyone, but I'll have a slightly different flavor for Tony, since you are an asset manager. And the question is, can you provide an example from your experience of a blended capital facility that you think was set up well? And tell us what was a critical thing that made it work. And for Tony, you worked in the power sector, so maybe you can tell us about one of those projects and what governments needed to do to make it attractive for a private investor to get into that space.
Sure, thank you. Good morning, everybody. So one part of this is obviously the financing and the money as it's put. But the other part of this is sort of the non-sort of tangible side of things, which would be around things like de-risking projects, right? So when you're putting together a financing package or you're working on a project, you don't necessarily need all the partners to bring money. One of the parts that partners can bring is do certain things, whether in the form of incentives or just put together the right environment to make the project actually bankable and de-risked. In that context, I think the power sector is actually a very good example of it. So when you think about, and I used to work for a fund called Actors that invested in power projects across Africa. A bunch of the power projects that we did were in the clean tech, and I think that sort of feeds into the SDGs. But when you think about the power sector, it is a very integrated chain, right? So you've got the power generation companies, you've got a transmission, and you've got the distribution side of things. It is so integrated and linked that you need all of these parts working together for any one part to be successful. And this is where governments can play a very important role in regulating all those sort of participants in that sector to make it bankable. So just sort of, for example, I can give you an example. If you're a power generation company, you've generated your power, you don't actually collect your money, right? So the cash is actually collected by the distribution company. And then it has to feed all the way down to you to collect it. A number of the projects that we have a project that we're working on on a wind power plant actually here in Ghana. That's in the Pampram Ningo area. We've done a couple of things in Nigeria, and it's worked very well where the government comes together and creates. So for example, I will feel comfortable knowing that at the end of the day, when the power is generated, I get paid for it, right? And a big part of that, in addition to the regulation, would be things like tariffs. So I think one part that a government can play in making sure that some of these projects are de-risked is that there's actually enough of an economic incentive for every single person in that chain to actually make a profit coming from the private sector. And setting cost-reflective tariffs is a big part of it. So you only enter into these projects if you believe that the tariffs are going to be cost-reflective. A second example that I'll give, just in this power sector as well, would be on the sort of input side of things. So if you are generating, you need a source of fuel, right? And it doesn't really make sense for me to build a power plant and then try to figure out, I've got to go and, explore for the gas, process the gas, pipe the gas to my power plant. It's just too much for one person to take on. This is where the government comes in by ensuring that there's actually some sort of gas or fuel sort of plan to support the whole industry. And a number of governments have actually done well in making sure that all these factors are present in the chain for any one person to succeed. Because when it breaks down at any one part of this chain, the whole chain sort of breaks down.
Thank you very much, Tony. That was really insightful. It would be great when you talk, Peter and Mr. Annan, if you could tell us a little bit also of what you do. So an example of a project that you think was really great, but also tell us what you do in your current organizations.
Thank you very much. What I currently do is currently work for myself, setting up an impact fund to support small and medium-scale enterprises in basically manufacturing. So that's what I am currently doing. But 2 months ago, I was the finance advisor for the Global Green Growth Institute, where my role was looking at how to basically catalyze private sector funding for climate action. I did that for the Rwandan government and the government of Ethiopia. And prior to that, I was basically investing in SMEs, also as an advisor to the government of Rwanda, working with their business development fund. So basically, I've been in the business development and financing, basically in the impact space for probably the past 10 years. In terms of examples, I would like to give 2 examples of how blended finance was used to basically achieve goals. The first example I will give is actually what I'll call a vehicle. A vehicle is basically like a fund or a mechanism through which different partners bring money together to support a cause. So there was actually a fund called the Africa Agriculture Fund. And the Africa Agriculture Fund was basically supposed to support agricultural development in Africa. So it was spearheaded or sponsored by the African Development Bank. And the African Development Bank brought in different development finance institutions. And they together, all the development finance institutions became one class of shareholders who took what we call an anchor position or a lost position. And by so doing, they were able to bring in other regional banks, like the Development Bank of South Africa, and some private fund managers in South Africa to participate in the fund so that the money can then be used to support agriculture. So this was called the Africa Agriculture Fund, and it's a good example of how blended finance was deployed. So if you look at this vehicle, you had the development finance institutions, you had the regional development finance institutions, and then you had the private sector, and then also I think OPIC also participated with debt financing. The only part that was missing was government participation. So somewhere along the line, we are hoping that governments will start participating in these type of funds by providing the de-risking mechanisms to draw in all the others. Another example I can probably point to is an initiative by Shelter Africa, which is basically looking at project finance for the housing sector. Shelter Africa initially tried to do the housing projects by deploying, should I say, supporting pure private partners. But that didn't turn out too well. So the new initiative that they are looking at is how to look at government agencies and governments partnering the private sector so that we can truly deliver affordable housing. So because when it is left to the private sector to develop housing, you realize that most of the houses will be probably $100,000 and above, and it's then out of the range of most Ghanaians. Let me put, if we put it in the terms of Ghana. So affordable housing needs to be really and truly affordable. So the way to do that is they are looking at an example in Ivory Coast, in the Songo project, where the government of Ivory Coast is providing land, is building the roads, providing all the utilities, and basically putting in all the infrastructure that a private sector developer would have had to develop on its own, and then inviting a private sector developer to basically build the houses. So on the development side, that arrangement allows the final delivery of the units to be affordable. And then also on the market side, the government also comes in to basically have some kind of off-taker agreement by working with government agencies, working with government should I say, institutions like the pension funds, social security, to find ways of de-risking mortgage uptake on the customer side. So these are two examples that have been deployed or being deployed successfully currently.
Thank you. Peter.
So my role is working with public sector in Africa. So in that respect, I do work with the host governments, the ministers of finance, but also work with developmental financial institutions like AFDB. We do work with donors, again, so as I've said, all the public sector actors who have those resources that we're looking to use as a catalyst, again, to get that private sector capital in. An example of blended finance that I would like to highlight is a securitization vehicle that AFDB did last year called Room to Run. Without trying to get too technical about it, what the bank effectively did was to select a portfolio of $1 billion of private sector and infrastructure loans. Now that portfolio effectively would have a credit rating of about a single B, which would then have an expectation of a certain probability of loss. So what they did by blending, though, is basically saying, creating a waterfall of risk absorption within that portfolio. So basically, AFDB kept the first 2.5% of any losses that would be accrued in that portfolio. The next 10% was taken by a private sector investor, Mariner, in the United States. Africa 50 came in and took 5%. And then the European Union came in and provided a backstop facility, or basically took another portion of 10%. So basically what you have is a 27.5% portion of the portfolio, so basically effectively $275 million, where you have both public and private sectors saying, I will take those first losses on that portfolio. Now, when you do that, you look at what is the probability of the rest of the portfolio actually defaulting. And they went to the rating agencies, S&P and Moody's. And S&P and Moody's basically said, for the remaining $725 million in that portfolio, that is rated a single A. Now, which means it's a very strong investment grade, which basically would have a much lower return than if you were to invest in a single B. Now, the importance of that, and it was alluded to earlier this morning, is, and this is really what the challenge we're solving for with blended finance. How do we create investment-grade assets in Africa for international investors to invest in? And the way to do that is utilizing blended financing by basically providing tranches of risk absorption against a portfolio of assets. And it could be health, it could be education, across all the SDGs. But as long as you provide enough of a buffer of an expected loss absorption, the remainder allows you to have then investment-grade assets. And if you think about investment-grade assets for the big pension fund managers, the big asset managers, that's where they want to play, because they have a fiduciary responsibility to their investor clients in order to preserve their capital, but also to make a return. So if we're able to create those investment-grade assets, the money that is currently, and we're talking hundreds of billions of dollars, if not trillions of dollars, that are currently invested in instruments in Europe that have a negative yield. So basically they are paying somebody to take their money rather than looking to invest in places like Africa. So I think this room to run AFDB can show you, and it's put a stake in the ground that says if you have a diversified portfolio of assets in Africa, you provide the right absorptions of risk capital to basically protect the next level of senior debt in a vehicle, you will have money come into Africa. And that is really what the aim of blended financing is.
Thank you very much. It's interesting to see the two perspectives that you brought to the answer and the three examples that you gave. I'm going to move to Tony. Tony, you sit on the board of a pensions fund. And so you're the guys who are sitting on the money in Africa. And what are the constraints that prevent you from investing in projects that could provide both a social and financial return? And what needs to happen for more funds like yours to participate in blended financing?
Good question. And just for a bit of context, so the fund, the pension fund is a fund that we invested in, so as an investor invested in, and it's actually located in Nigeria, so not here in Ghana, in case people were wondering. But I think it's one of these dilemmas, right? And then the holy grail is to get to a point where, in Ghana, on the African continent, we're able to mobilize capital and invest that capital in projects that, for example, infrastructure projects, but projects that also sort of promote that social development. That's the holy grail, but it's not happening. I mean, there's a number of examples that have been given, but I don't see too much of local capital actually going in and taking that sort of that risk for a number of reasons. And I'll just start with the macro issue. And I think that the big issue is that, look, the government is borrowing at very high interest rates, right? So if you have a situation where governments can go in and borrow at 15, 20, 25% to finance whatever needs that they have every year in the budget. This is recurrent expenditure, not necessarily capital expenditure. Then as a pension fund, you sit down and look, your number one goal is to protect your pensioners' money. So why go and take a risk on a project that needs to be built, that needs to be financed, that needs to be, needs to be commercialized, collections and that operations, when you can just simply put your money in a T-bill? So I think that in talking about government, the number one enabling thing that can flip this whole story on its head is just a better, more stable macro environment with lower inflation, lower interest rates. That actually, because that makes it, because at the moment the government is competing. The government may say they want to do these projects, but to be honest, they're more focused on something else, right? So just lower the interest rates and then have this capital actually go and look for more risk, I think, is the main issue that I see. One of the second issues that we face is just I guess, relating to the first problem is that, so people are not coming up with projects. It's a very weird situation where, you're sitting down on a pot of money and looking to do this, and you're not actually getting enough sort of people coming up and saying that, look, we want to go and finance this road over here. The government will give us a concession to do it for how many different, for how many years. This is what the tolls we expect to get out of it is. We're not getting those, we're actually not seeing enough of those projects. And I think that more people should get involved in things like this. And then the third bit, I think, would just be just around, sometimes when you do see this project, there isn't enough of a sort of like a private sector participation, right? So it works perfectly when you have the government as a partner with a private sector that's in charge of the management of this, because execution is the key to all of these projects. And most private fund managers or pension funds will do it if they believe in the teams that are doing it.
Thank you very much for that perspective. Mr. Annan, I'll continue with you, and I want to get really practical now. Let's say I'm in the audience and I'm part of a municipal government, or I'm the head of an institution, or maybe I'm even an entrepreneur, and I have an idea for a project that I think is a good candidate for blended financing. I'm not the Africa Development Bank, and I have this idea for a project. I want to have participation by international development funding, and I think that there will be impact. I want to have participation from the private sector. What should I do? What do I need to have to turn this project into something that is structured that would be interesting? Do I have to be a certain size? Any networks I should join? Some advisory firms I should be talking to? Like, what do I do practically if I'm in the audience and I want to do more, or I want to explore blended financing?
Thank you very much. I'll try to answer this question specifically, some of the things you need to do, but at the same time, to kind of try and follow on with what Tony was saying. As the other panelists said earlier on, the whole concept of blended finance, it's about de-risking. You put in money in a pot, but somebody has to take a position that basically allow those who are looking for pure private returns to participate. Traditionally, the development finance institutions have been playing this role, which is the African Development Banks, and the European Investment Banks, the IFCs. But we are yet to see strong participation from governments and the donor community. The reason why I bring the donor community is that the donor community are playing in the same space, but they often come with their own programs. So even though the end goal is the same, they would rather do their own program as opposed to blending their finance with other partners to achieve basically the same goal. So in order for blended finance to take up, vehicles have to be created, and those vehicles should have those anchors who will take that loss position to de-risk the private people to bring in the money. Now, assuming that is being done, then when you have your idea and you come to say, my firm, Impact Capital, to say, I'm looking for money for to start my business. Businesses, just like human beings, goes through a life cycle. You are a baby, you learn how to crawl, you learn how to run, then you wither off and you die. Basically, businesses go through the same process. So if you come with me and you have an idea, I look at you and say, can she crawl and can she walk? So the process of figuring out whether you can crawl and walk and run involves a lot of what? Risk. And because it involves a lot of risk, I would need a vehicle where people like government, donors, have been able to give me some money that allows me to take that risk on you and hope, the word is hope, that eventually you'll be able to walk and run. So on the vehicle part, from where I sit, that is what I will be looking at. What stage are you in your development? What risk do I need to take on you? And is it worth my while taking that risk? Now, on your side, we see people come to us every day and say, I have these fantastic ideas. But as a friend of mine will say, when you go to the graveyard, there's a lot of dead ideas buried down there. So the most important thing is not the idea that you have, but the steps that you have taken to execute the idea. So let me give you a practical example. When we were doing these things in Rwanda, somebody comes to us, let's say 2 people came to us, and they said, oh, we're importing toothpicks from China. And I don't see why we can't do toothpicks in Rwanda, because we've got a lot of bamboo trees over here. Okay. So of these 2 people, the first guy comes and says, oh, we are importing toothpicks from China. We import X amount in a year. I could buy a machine, and I'll do a toothpick, and I'll make X amount of money. The second guy comes and says, you know what, we've been importing toothpicks from China. I actually go to Uganda, I buy toothpicks, and I sell it on the border with Congo, and I've been selling toothpicks for the past 2 years. But I think that I'll be able to get a machine and produce my own toothpicks. If you were me, the guy with the money, which of these 2 people would you support? One who has a fantastic idea but has not taken a step, or the other one who has actually taken the step by going to buy toothpicks and what? And selling them. So if I'm to invest my money, at least I know that he has demonstrated his ability to what? To sell. And then the only thing I need to figure out is his ability to what? Produce. But the first guy has not demonstrated his ability to sell, neither has he demonstrated his ability to what? Produce. Which means that the risk on that second guy is higher. So the advice I will have is that if you have an idea, no matter how small the idea is, don't go to investors with just talking about your ideas. Go to investors talking to them about the concrete steps that you have taken to be able to what? Explore the idea. And if you do that, you are more likely to get our ears.
Thank you. That's really helpful. To you, Peter, I will ask, we've talked about what blended finance is, we've looked at examples, we've talked about what would make asset managers invest more. The truth is that there isn't a lot of blended financing happening. There's a bit of it happening, there isn't a lot. My question is, what needs to happen for this to become more mainstream? What do we need to do to take this idea to scale? So it's not a novel topic we talk about at conference panels, But everybody knows about it because it's happening every day. It's in the news, it's in what we eat and do. It's something that we're all aware of and engaging with. What needs to happen?
I think there's a few things, and I think one big one Elsie referenced in her remarks earlier this morning about the country mapping of SDGs. You know, it's really having a plan on a national level to say, you know, these are the things we want to achieve, these are the opportunities, this is how we're going to allocate them to the SDGs. And once you've done that, then you say, okay, who's got the resources to help me achieve these investments into these SDGs? Because if you think about an opportunity, you know, there are opportunities that can give you 100% financial return. And there's opportunities that give you 100% social impact. So where you have, say, mobile technology, you know, it's a very commercial, you're going to get a financial return. Yeah, there's the associated social impact, but it's mainly driven by that financial return, that commercial. Investing in children and education. There was not an immediate commercial return there, but there's a social impact. And who's going to benefit from that? Well, ultimately, the government will benefit that by having an educated workforce who pays taxes, who will drive economic growth. So it's the government that really has to sort of say, look, I'm going to be the sponsor of this project. And I will provide that risk loss to a point where I can get private sector come on top of that, because they'll get paid back through school fees or budgetary allocations, what have you. So it's understanding where you are in that chain. It's then making sure that you're aligning all the resources that you have available, and I'm talking from the government perspective, of how do you get everything financed. Now, the good news is that the ESG bond market is really growing about 15% on an annual compounded rate. There's $680 billion in sustainable bonds, green bonds right now. This market is growing, and it is the investors that are driving and growing this market rather than the people who actually need the money. So it's really continuing to sort of latch on to that market force. And through that is really about capturing data and disclosing that data. You know, we think about Africa, the risk in Africa has been mispriced historically. And part of that is because there's not sufficient data capture, there's not sufficient disclosure. And this is also one of the compelling things about blended finance, because you have NGOs, philanthropic organizations, that have been out in the fields, you know, in the villages, measuring impact and such. That impact isn't given to the private sector to say, look, this is a sustainable project. We've been doing, you know, agricultural financing in rural Ghana for 20 years. Okay, well, share that data with me, and I can then do a proper assessment of what that risk is, and am I going to get a proper return? So I would say, you know, how do we scale up? I think we do better planning, we do better mapping. We take advantage of, you know, the market developments as they occur, and we capture data and we disclose that data to attract that capital to come in.
Thank you, panel. I think you've done a great job of helping us to understand what blended financing is. I want to open it up to the audience to make sure that we all leave here understanding and having some clear action points, whether it is going to tell other people about it or lobbying our governments to take certain steps. But I have a few rules. Keep it short. No good morning. Don't tell us how much you've enjoyed the panel. We know already. Just tell us your name, your organization, and then in 30 seconds, make your comment or ask the question. Nothing more. So we'll take, because of the lights, I can't quite see everyone, but if you just raise up your hands, someone will bring you a microphone, and then name, organization, straight to the point. I see a hand up in the second row.
My name is Shadrach Nyama. My business is Nuanshi EHS Solutions. We are into waste management. Does that mean that without a pragmatic step towards an idea, a business idea can never get funding in Ghana or in Africa? That's my question.
without pragmatic steps
Like
towards
without you have
it.
started anything. So you have an idea, you can't convince anyone to support you start the idea. That's the question.
Thank
Because
you.
some business ideas require huge amounts of money.
Thank you. We'll take about 3 or 4 questions, and then we'll answer them as a group. So if you have a question, just keep your hand up, and the microphone will come to you.
Hello, my name is Shelter Lutu from Ghana Highway Authority. My question goes to the gentleman in the middle. It's very interesting to hear from you that you have funds and you're actually looking for projects to invest in those projects. I don't know whether you are very well advertised, because I know there are a lot of projects in Ghana that are looking for funding. And currently, in the road sector, there are a lot of, projects that we're looking for funding from the private sector, from, pension funds, from all kinds of financing. My question is, what exactly are you looking for? For example, if you want to develop or invest in a project in Ghana, let's say a road sector project, what actually are you looking for that will enable you to make a decision to actually invest in a project in Ghana? Thank you.
We'll take one last question.
My name is Emmanuel Pobi from Ministry of Roads and Highways, and my question is actually 2. So the first question goes to other panel members, and it's on blended financing. The examples you gave were all in economic infrastructure, which are able to generate returns to the investors. And since we are talking about SDGs, with this with no poverty, zero hunger, my question is, what strategies are available to attract blended financing to support social infrastructure that will end no poverty, that will end zero hunger, and that will ensure that there's education for every child? And my second question goes to Tony. He made mention that one of the risks to pension fund managers is unstable macroeconomic indicators or parameters. So I want to ask him that what risk mitigation mechanism are employed by pension fund managers to deal with such risks? Thank you.
Great. So we had a question on whether a person with an idea can ever get funding. Mr. Annan, I'll give you that question. Can a person with just an idea get funding?
A person with just an idea can get funded. As I said, it's a cycle. So just an idea, a seed, can get funded. So when I talk about concrete steps, it doesn't necessarily mean I use having sold the toothpick as an example. But to build a business doesn't necessarily involve, let me say, selling is not the only decision-making criteria. So if you have an idea and you have thoroughly researched it, you have crossed your T's and you've dotted your I's, and you can convincingly motivate what you want to do to a fund manager, he is likely to support you. So concrete steps doesn't necessarily mean I sold, I produced, or any of the physical things you see. But making sure that you've done your due diligence well, you've done your research well, and that you have actually articulated your value proposition very well. You know, we see business plans that after you read the first 2 pages, you want to take it and throw it in a dustbin. Because the guy is just going to Google, copied and paste, and you don't see any real research and thinking that has gone into the proposition that is being shown to you. So the amount of energy you put through in thinking through what you want to do, if it is, let's say, soya food you want to do, you've researched on how much soya bean is planted, you research on how production rates are going up, you figure the marketing part, and you make concrete analysis that will then convince the investor to invest, and he will invest in your ideas.
Great. Thank you very much for that, Ms. Annan. I'll push the next question to Peter. It was actually to the whole panel, but I think we have only time for one person to answer. And it's the one around, we're talking about economic return. How do we fund the SDGs? Any perspectives on that?
So if we look at SDG 4 on the education front, we think about who will get the return if we invest in education, right? And it will be the country, it will be the economy, it will be the government having an educated workforce, and it will be the private sector that will employ that private sector workforce. However, that return is not immediate, and it's not necessarily monetized in a short period of time. So it's the government's responsibility, and which they take, is that we will provide the necessary budget allocations to support educating a child, from year 1 to, through tertiary school and so. Now, the government doesn't have all that budgetary resources available to pay up front. However, they need to find like partners, and then again, this is where the country mapping on SDGs can come in. Which donors are focused on education? Which NGOs are focused on education? What partners can the government work with to put a financing in place that matches the budgetary resources of the government over a period of time? So I want to roll out tablets to all primary school children, and that's going to cost me $100 million to do so, but I don't have $100 million. I only have $10 million a year to do that. Through blended finance, can we come up with an affordable financial package to get that $100 million so those tablets get to the students tomorrow, and not 1/10 of it over that 10-year period of time? So that's the power of blended finance. Who's the like partners that I can work with? What resources can I leverage so I can deliver against that SDG today, so we can really begin to realize the impact today, but do it in a financially prudent and responsible way that I can afford, given my budgetary resources.
Thank you very much. And then, Tony, there were some specific questions to you. Somebody wants you to invest in the road sector, and I know your fund is in Nigeria, but let's say it was in Nigeria road sector. What would you need? What are you looking for? What would you need to have to be able to participate in the road industry, for example?
Yeah, and then there was the pension.
And then the pension.
The risk. So I would say road projects, and it's a fair point, road projects are notoriously difficult to finance for a number of reasons. But they have been done, right? So there's at least 2-3 projects that I know of that have been financed. So what do you need, basically? So I guess the key part of this is just understanding the different parties you need to bring together. So if you work, for example, in Ministry of Roads and Highways here, and you want some of these projects to get done, it's important to understand who you need to come in, right? So you as the government are a key part of this equation. That's number one. Number two, you obviously need an investor, right? So it could be a pension fund. You can get international pension funds. You can get some of the local trustees, for example, to invest as well. But number three, you need a sponsor. And I think this is where a lot of projects actually go haywire, because the investor, the pension fund, is not going to operate the project, right? So they're not going to be the guys to construct it, to toll it, to do everything. So what you need to do is to find somebody who is actually willing to do all of that. And that ecosystem together can actually raise financing. So I think just bringing together the ecosystem is one of the most difficult things that can be done. The second reason the second thing to do is really around the commercial side of things, right? So a pension fund, your sponsor, those two guys, and perhaps yourself as the government, will only get into this project if you feel there's going to be enough sort of return as well as downside mitigation, risk mitigation. So with a power plant, I can tell what my output is, 300 megawatts. That's nameplate capacity. I know what my tariff is, so I know what my costs are. So I have a very simple idea of what my profits, my cash flows are going to be. With a road project, it's very, very difficult because it all depends on the traffic that's coming in. Who knows, a different road gets built somewhere, do I lose traffic? So I think the sort of commercial studies around the projects are very important, right? So you have to do some studies to estimate like the amounts of flow that you expect to come in. And then the tolling, you can't do this unless you have a way for the pension fund and the sponsor to actually make some revenue. And they will not rely on the government making a payment to them. It needs to be coming somehow directly from the customer, right? So tolling, you can't do it unless you have a tolling arrangement.
Tony, for the second question, if you could be really brief, because I think we're running out of time.
Yeah, just on it's a very good question because the macro, you're dealing with 22% Bank of Ghana rate 1 year, you're dealing with 15% the next year. It's a very difficult thing to do. I think what most funds try to do is basically diversify, right? So have the right mix of government bonds, corporate bonds, as well as equities. And then the second thing, and I'll end here, is just understanding the age profile of your customers. So for us, we really look at the age profile that we have, and when we invest in bonds, duration is a very important thing. So just actually monitoring the duration risk that we're taking across the different portfolios.
Excellent. Thank you so much, Peter, Tony, and Anthony Annan. His name is also Tony, so we had to call him Mr. Annan to make the panel work. This has been such a delight, and we look forward to seeing blended financing go. Thank you.
And how about a resounding round of applause for Amalate? Thank you very much for lending us your mental agility, your expertise, and all. To this end, ladies and gentlemen, it's been very enlightening, hasn't it? Blended financing for sustainable development. How about a group photograph, all of you? Photographers, would you be kind as to capture all of them? And so this leads us into more socially involving ways of funding our projects. We're going to break out into 3 sessions, ladies and gentlemen. The first session will be on local level financing of the SDGs. Then we'll go to developing bankable projects for impact financing. And the last will be financing the SDGs one project at a time.